Hi, this is Tom Elliott with another market update for Hodges Real Estate, coming to you today live from 3AW Studios in Melbourne. Well, the economic news in the past month has been somewhat mixed. Now, on the positive front, GDP grew in the June quarter. It was 1.2%. That was well in excess of what most economists had been forecasting. In fact, the general forecast around the market was that GDP for the quarter would only grow 0.9%. Another bit of good news for property investors, there's a push in federal parliament to replace a lot of property taxes at the state level with an increased GST. Now, we don't know if this will actually get up because some states are quite resistant to the idea of increasing the GST. But in any case, were it to go ahead, it would mean that consumption taxes could go up, property taxes could go down. And that would only be good news, of course, for property investors. On a more negative front, however, the unemployment rate. Now, in August, it rose from 5.1 to 5.3%. And for various reasons, I think there's a good chance, sadly, that unemployment will continue to rise, probably peaking at a maximum of 6%. Now, if unemployment does continue to rise and it does go towards 6%, I believe the Reserve Bank will have no choice but to act. So I think there's an excellent chance that interest rates will be cut by around about 0.5%, either late this year or in early 2012. Now, this means that unemployment hopefully will be stopped in its tracks, and of course, if interest rates are cut, it's an unambiguous positive for the economy. Other negatives include, well, the retail sector is doing it very tough, and if you're an investor in retail real estate, then I guess that's going to be tough as well. Also at the federal level in government, there's a lot of uncertainty at the moment. Now, this week we've seen the launch of the carbon tax formally in federal parliament. I think that the carbon tax will be passed. The government does have the numbers. Where the uncertainty comes in, however, is that the opinion polls of the government are so very bad, and they are disastrous for Labor at the moment, that assuming we do have an election between now and 2013, which is a very high chance, almost certainly the coalition will get back into power. So it does mean, as an investor, again, whatever the class is, but specifically with property, you could end up with a carbon tax for, say, 1 or 2 years, only to see it overturned by the opposition. Only time will tell. My bet is that in a few years' time, the carbon tax will be a thing of the past. I think the opposition, and specifically the alternative Prime Minister Tony Abbott, is absolutely certain to see the end of it. So as far as property goes, just an interesting personal anecdote. I was privy to some of the behind the scenes of The Block, of course the successful television show on Channel 9. Now, on one hand, you'd say that the on the night auction results, when the 4 places were auctioned and only 1 sold, that was quite negative. However, a few days later, all of those properties sold. They sold above their reserves. But even though the reported clearance rates are not particularly great, the fact is good properties are still selling. So, if we get a cut in interest rates, either late this year or early next year, and indeed this means that the economy starts to pick up as a result, that's good news for property owners and investors. For Hodges Real Estate, I'm Tom Elliott. Thanks very much for listening to another market update, and I look forward to your company again next month.